Hello everyone, welcome to our morning briefing. I'm Andrea and we are nearly at the end of the August, 21st of August, another 9 days to go. So we have seen Wall Street actually closing quite weak yesterday. Of course, that was inspired by the decline in the treasury yield. So once again, we have seen yields compressed to the downside with this gap between 10 and 2-year treasury yields getting compressed a bit. On the flip side, however, we had in general a mixed Asia session, and that has to do more or less on the anticipation of the FOMC minutes today, but also on the very significant Jackson Hole symposium later in the week, along with some negotiation that will take place again this week between Japan and US. So all these meetings that are coming ahead will cause actually this mixed behavior from in the markets. So we have seen over here S&P 500 actually losing some ground yesterday, nearly 0.8%, a very late sell-off. However, today, like since overnight, we have seen that it's trying to gain some losses. This is the decline came after after actually another tweet from President Trump. Once again was referring to Fed and that he wants to an aggressive cut rate in interest up to 100 points and the restart of quantitative easing policy. So once again, Trump is like accusing Fed and is like pushing Fed to cut rates. However, the anticipation in the market regarding the Fed are quite optimistic. So the release of the minutes, especially for the end of by having in mind the end of July, there is some dovish signals. So the market in general not expecting 100 points easing cut, but more or less up to 70 points by the end of the year. So not right now. They are quite optimistic for the next FOMC meeting. So other than that, we have also seen a drop in the European rates as well, which I don't have over here. So okay, let's move on to the stock market, to the currency market. Then dollar remains on beat. So we have seen euro dollar spiking lower, 110.88. So dollar remains on beat. Next real support is at 110.75 and 110.65. So it seems that not as dovish FOMC minutes expected, but also which is something that of course could save euro bulls, but also the fiscal stimulus from Germany, the unknown impact of Brexit, the political crisis in Italy is what actually pushed euro dollar lower. And if that continues, if that decline continues, we might even see the euro dollar retesting August 1st 27 months low at 110.27. Let me flip to the daily chart, and that should be around here in the 1st of August. Other than that, pound. So pound is flipping to the downside, but it still holds that support at the 200 period moving average at 120.123. So it has that support. We might see, if we see some upside movement, then it could even retest this 20 period moving average or up here at 21.73. But yeah, that's seems unlikely for now. So pound still on the downside. Gold is down a few dollars. So again, it broke the 1500s area, moved to the downside, a lot of pressure as it seems, but this of course has to do on the larger than expected on the dollar beats, while on the flip side oil drifted higher on the larger than expected inventories yesterday. This is what actually pushed oil higher and what actually drove Canadian dollar as well. So resistance holds at 56.50 and support remains over here 56.10 or the around 56 area. So that was for today. The focus turns today of course on the FOMC, but prior FOMC minutes we have the Canadian inflation data and core at 12:30 GMT time. So thank you for watching. I hope you're having a great trading day ahead and see you again tomorrow. Bye bye.